of these relationships, financial institutions can better serve communities, including facilitating expanded opportunities and inclusion in the form of access to financial services to those who may be less likely to access financial services through traditional bank products. Efficiencies include servicing clients in a timelier manner, improved compliance with legal and regulatory requirements, better management of operational risk, lower cost transactions, reduced friction in payments, and enhanced data protection. As innovation in the provision of financial services accelerates, it remains important that a proper balance be struck between fostering innovation and attention to due diligence to ensure safety, soundness, stability, and consumer protection. At the same time, federal and state regulators of banks and credit unions must not reflexively and unnecessarily stifle innovation, especially if motivated by politicized interests. Unfortunately, that has been what is occurring far too often recently. For example, in June of 2023, the Office of the Comptroller of the Currency, the Federal Deposit Insurance Corporation, and the Federal Reserve issue final joint guidance establishing principles for all banks under federal supervision to consider when entering into third-party relationships. One Federal Reserve governor argued that the guidance is yet another part of a concerning pattern by regulators of deviating from a risk-based and tailored approach to supervision and regulation of banks. Furthermore, an FDIC director argued that elements of the guidance will create more ambiguity for banks rather than more clarity, which guidance should be intended to provide. Opaque guidance and rules create more ambiguity for banks. Ambiguity equates to higher prices and less options for consumers. These outcomes are not beneficial for our financial system or for American households and businesses. Following the release of the joint agency guidance in 2023, community banks expressed concerns that it does not provide bright-line assurances that certain activity would or would not be permitted and was not prescriptive enough to explicitly prohibit certain activity. The guidance was too vague to provide an executable roadmap discerning what activities regulators would find acceptable or not. Such opacity leads to unnecessary uncertainty, which can impede adoption of some services and innovation and could lead to regulation by enforcement. Unprincipled regulatory agencies can, and unfortunately do in some instances, use regulation by enforcement to execute agendas outside of their mandates, therefore evading the intent of Congress. Unelected bureaucrats need to provide clear rules and be responsive to the actions they take that impact the banking system. I look forward to hearing about the experiences of today's witnesses, along with your views and suggestions for improving the financial landscape throughout the Commonwealth of Kentucky and the United States. And these field hearings, I will say in conclusion, these field hearings are not common, but I think are extremely useful, where Congress actually comes to you, the American people, in the heartland of our country to get a real-world view of what is possible in the area of financial innovation. And I think that's very refreshing instead of just relying on experts inside the Beltway. So with that, we welcome today the testimony of Kirk Chartier. Mr. Chartier is the Chief Strategy Officer of Enova. Mike DeVere. Mr. DeVere is the Chief Executive Officer of Zest AI. Karen Harbin. Ms. Harbin is President and Chief Executive Officer of Commonwealth Credit Union right here in Kentucky. Amy Roberti. Ms. Roberti is Global Head of Public Policy for Stripe. And Steve Traeger. Steve Traeger is the Executive Chair of Republic Bank and Trust Company, also located here in the Commonwealth. We thank each of you for taking time to be here. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony. Without objection, each of your written statements will be made part of the record. And we'll go in order down the line, and we'll start with Mr. Chartier. Chartier, you are now recognized for 5 minutes to give your oral remarks.
Thank you very much. Good afternoon, Chairman Barr and members of the Subcommittee on Financial Institutions and Monetary Policy. My name is Kirk Chartier. I serve as the Chief Strategy Officer at Enova International, headquartered in Chicago, Illinois. I've worked in financial services and technology for over 30 years, including Charles Schwab, Dell Technologies, and Safeco Insurance. Innova is a leading financial services company utilizing machine learning and world-class analytics to offer loan and line of credit products for consumers and small businesses in the U.S., as well as offering services and technologies to banks to help them serve those same customers. I'm grateful for the opportunity to discuss the role Innova plays and its more than 1,650 employees in increasing financial inclusion in America. Since our founding 20 years ago, Innova has been committed to helping hardworking people gain access to fast, trustworthy credit to meet their financial responsibilities. To date, we've served over 10 million customers, originated or serviced $55 billion in loans, and have been recognized as a best place to work in IT for over a dozen years. Innova is a $4.6 billion balance sheet company operating some of the best-known brands in consumer and small business lending, including NetCredit and OnDeck. My company is both a direct lender and a service provider to community banks who seek to expand the population they can offer loans to. Smaller banks leverage the investments companies like Innova makes in their marketing, data and analytics, servicing, compliance, and capital markets capabilities so that they can compete with those large money center banks. The reality today for Americans is stark. Many are struggling with financial instability. A recent Federal Reserve report highlighted that nearly 40% of Americans could not meet an emergency expense of $400 from their savings. For people with credit scores below 680, it's even worse. 52% of them report being turned down for loans in 2023. They don't have the savings and they can't get the loans. These challenges are not unique to consumers. Another Federal Reserve study showed that 52% of medium to high-risk small businesses were also turned down by banks for loans last year. Innova serves this critical need by offering products designed to provide pathways to better financial health for consumers and small businesses that often do not qualify for traditional bank products. By serving such underserved groups, we believe we are contributing significantly to financial inclusion, providing many with the means to navigate unexpected financial challenges or to grow their businesses. Additionally, using an online model means most people can get convenient access to credit through their electronic devices when and where they choose. Innova can do this because it has developed proprietary technologies that harness the power of data and analytics and supervised machine learning. These technologies not only ensure efficient and fair credit assessment, but they also safeguard consumer data through rigorous security measures. However, the landscape of digital finance is evolving rapidly, and our ability to continue innovating is challenged by a complex patchwork of state regulations. These laws have not kept pace with technological advancements in data and analytics, the essential tools that enable us to customize our products. Activists are driving changes in state laws regarding lending practices and banking that can pose real challenges. There are novel theories out there of true lender tests, specifically targeted at banks working with third-party service providers, and some are advocating for states to opt out of national banking laws like the Depository Institutions Deregulation Monetary Control Act of 1980, called DMICA by most. That opt-out would undermine our dual banking system. Ultimately, this all leads to less competition and fewer options for those seeking credit. We believe that Congress could play a significant role in bringing more clarity and certainty to this market, which in turn would result in more innovations and a greater number of banks being able to serve more customers. While prudential regulators have a valid when made rule in place, there's a need for a uniform true lender rule to go with it, one like the OCC's 2020 rule. That was straightforward and clear for the bank, regulator, and borrower. We would also suggest clarifying DMICA opt-out authority and strengthening Congress's oversight authority on federal regulators. Recent Supreme Court rulings have stated that the executive branch administrative agencies must have clear directives from Congress to function properly. These actions would increase the number of banks lending to people and businesses that need it most by reducing uncertainty about the risks and liabilities of those programs. Thank you for the opportunity to share our perspective today. I look forward to addressing any questions you have.
Thank you. And now, Steve Traeger, you are recognized for 5 minutes.
Good morning. As mentioned, I'm Steve Traeger, Executive Chair of Republic Bank, and good morning and welcome to Congressman Barr and our distinguished congressional panel, as well as all the other folks of interest out there. Wanted to spend a little time and tell you about Republic Bank and what we're about, and then some of the products that we offer and some of the divisions that we have in order to better serve our communities and a broad community. So Republic Bank, as mentioned, is a Kentucky-based financial institution. We're one of the 5% largest banks in the country at about $6.5 billion in assets, which are spread and served among our 47 locations in 5 states: Kentucky, Indiana, Ohio, Florida, and Tennessee. This branch network is a very traditional branch network, and we offer traditional bank products to the communities we serve: mortgage loans, commercial loans, lines of credit, various deposit products, again, throughout the communities we serve. And we serve about 120,000 customers throughout those communities. In addition to that, kind of our icing on the cake in our desire to be more than just a traditional community bank are non-traditional bank products that we offer through a division that we label as Republic Processing Group. Republic Processing Group, I'll talk a bit about that in a minute, but basically that's composed of tax refund solutions, Republic Processing Systems, and also Republic Credit Solutions. But before I get into that, let me proudly talk a little bit more about what we do at Republic Bank. I'm proud to say that we've been recognized as one of the top performing banks in the country. And like most banks in our industry, we are extraordinarily transparent. We are most accountable to regulators, our customers, shareholders, in the communities we serve. I know of no other industry that is more accountable and transparent in that regard. I'm also proud to say that we've received high marks for customer service, philanthropy, and community engagement, including most recently our recognition in 2024 as a Best Places to Work in Kentucky, Best Partners in Philanthropy honoree, and also our recent Outstanding Community Reinvestment Act rating. In addition, as far as philanthropy is concerned, we are proud to have our name and be the primary funder of the Republic Bank Foundation YMCA, which is a new YMCA in an underserved part of our community in Louisville. And also, we were the lead bank for the Louisville Urban League Sports and Learning Center. And then we have a $6 million commitment in the form of our community loan fund, which we make funds available to businesses in underserved part of the community. In addition, we have an investment of more than $73 million in low-income housing projects in the communities we serve over the last 2 years. Now, I mentioned Republic Processing Group, which is another component of Republic Bank that's a bit non-traditional and enables us to serve several million consumers throughout the country with the aid of our partnerships such as Inova and other Fintech partnerships. Predominantly, again, I mentioned TRS, which is tax. We're in the tax business. We process over 2.5 million tax refunds electronically for consumers around the country. In Republic Payment Solutions, we have about 1 million prepaid cards outstanding where we serve folks throughout the country. I guess my discussion focus today is Republic Credit Solutions that enables us to bring small dollar credit products to an underserved part of our country through partnerships with 2 fintechs, one of which is Inova here today. These partnerships we take very seriously. You really want banks to be engaged in these partnerships because I would like to think we bring an accountability, a transparency, a risk component because we are at risk for these partnerships. And the fact of the matter is, through our legacy systems, we would be unable to serve this large community without the help of folks like Inova. And again, you want banks in this, engaged in this, and you want to make sure that there's not such an excessive regulatory deterrence to engagement to make sure that we are held accountable, but appropriately accountable for protecting consumers, holding our partners accountable, et cetera, et cetera. I think we also serve as a form of oversight and accountability ourselves, because that's a big component of the life cycle that we have with these folks. I can tell you there are some very responsible fintechs out there. I'm proud to say that the two we work with, Inova being one, fall into that category. But not every fintech is like that. And of every 10 that approach us, we turn down 9 of them. So we have that level of accountability. So if I had to categorize my ask, it would be, let's not totally discourage banks from doing these things and partnering, because again, we bring a good accountability to it. Thank you.
Great. Thank you very much. And I'm being light with the gavel, but we've got some great testimony, so I'm letting folks go a little bit over. Mike DeVere with Zest AI. I met Mike, a California fintech who educated me right up front. He works with Kentucky Credit Union. So, Mike, you're recognized for 5 minutes.
Thank you, Congressman Barr. Thank you for inviting Zest AI to take part in this field hearing to share how we've seen AI, artificial intelligence, and specifically our technology, make a positive impact on credit union clients like Commonwealth. Little fun fact for everybody here, we actually have one of the leading innovators in the adoption of AI in underwriting sitting right next to me, and it's from Kentucky. Right? I mean, when we now look at, from a Zest AI perspective, some of our largest customers, like Citibank, all the way to Molokai Credit Union, we're processing over $1 trillion in loans. That's 1 in 5 credit union members across the U.S. That's 1 in 5 credit union members here in the great state of Kentucky. So I can't thank you enough for this opportunity to present with you, Karen, and thank you for your leadership in the space. What I'm here to share with members today is how Zest AI has done the work, hired the right people, and built the technology that is capable of building a robust, inclusive, and compliant banking infrastructure for lenders like Commonwealth Credit Union. And by building this better, fairer system, we remove a barrier that has existed for millions of creditworthy people who live in the U.S. We're talking about over 40 million Americans who are either unscorable or not scorable and don't have access to opportunity, which is credit. At Zest AI, we are thinking constantly about the inequity and status quo of credit score system. The status quo system, that's a code, right? The industry score that we all wonder about the explainability associated with that, that's been in place for over 40 years, but lacks transparency and is held to a different standard than other fintechs like ourselves. You know, the level of transparency that we have to live up to goes everything from model explainability to generating adverse action codes and things like that. This is a Goliathan labyrinth of regulations we have to run through, yet there are other monopolies out there that don't have to follow the same rigor. For model transparency, our models are accompanied with reports, analysis to track and explain outcomes for consumers. These insights into the data variables, contributions are key to transparency, explainability, and compliance. Lenders that use our models can actually see what data inputs went into the score. This is not a black box. This is not the Terminator. It's not self-learning. This is supervised machine learning that we're using, and everything is explainable. AI models are all required to provide information sufficient to disclose the consumer details about the outcomes of the decisions that were made using with the AI, also known as the adverse action notices required under ECOA and FCRA. These notices inform the consumers, which is important, and the members of the reasons they could not get the credit they sought. However, the quality of models can vary, and a fully transparent AI model like the one we custom built for Commonwealth Credit Union is necessary to generate accurate adverse action notices. AI can be a powerful force for good when done right. It's not the boogeyman. With more data, insights, and better math in the form of artificial intelligence and machine learning, Zest AI clients can safely expand credit access through more accurate risk predictions, state-of-the-art model governance. Many of our customers, when we look across the results that they're seeing, will see increases in approvals of 25%, decreases in charge-offs. Who doesn't like that? It expands access to their full customer base. Zest AI focuses on being the catalyst for economic equity by leveraging AI's potential for good. Everyone has worth. Lending decisions should reflect that. We'll say that again. Everyone has worth. Lending decisions should reflect that. This idea of credit worthy, these are Americans. Every American should have equal access and a fair shot at credit. I look forward to working with you all and sharing any insights I can on the work we do at Zest AI to improve equitable access to mainstream credit.
Thank you, Mike. And speaking of that innovative Kentucky Credit Union, Karen Harbin is now recognized.
Thank you. Good morning. I'm Karen Harbin, President and CEO of Commonwealth Credit Union, headquartered in Frankfort, Kentucky. We are a state-chartered credit union with over $2 billion in assets and 18 branches in the Central Kentucky and Louisville metro areas. Thank you for the opportunity to be here today to talk about how Fintech partnerships enhance our ability to serve our credit union members. In 2019, Commonwealth set out to make better lending decisions for our members. The lending team wanted to confidently lend down the credit spectrum through more accurate, unbiased decisioning that would not increase risk. They also knew we needed to innovate the lending process to meet our members' increased demand for a fast, frictionless lending experience. We set out to find a Fintech partner in the marketplace that could help us meet these challenges, and we found one in Zest AI and their underwriting tool. Zest AI was ready to fill in the gaps with increased automation and accuracy. This allowed our underwriting teams to focus on members who need more personal support with their application. Their technology has allowed us to say yes to more members while not negatively impacting charge-off and delinquency ratios. With nearly 3/4 of all consumer loans decisioned automatically under this partnership, Commonwealth's ability to compete with other lenders has skyrocketed. Since 2021, Zest AI has helped Commonwealth approve more than $370 million in consumer loans. The performance of these loans is also stronger. With this technology, we can approve member loans outside of regular business hours, enhancing convenience and accessibility. For example, in 2023, we recorded over 3,000 more loans than in 2019. Zest AI has helped us make previously invisible credit files scorable, again, enabling us to say yes to a broader and more diverse range of applicants. Using automated underwriting as part of our partnership with Zest AI, Commonwealth has increased our approval rates for minority borrowers, doubling it for auto loans, increasing by 40% for credit cards, and raising it by 9% for personal loans. Loan approvals for female borrowers have also seen similar increases. This partnership has been very successful for us, and we believe this is a great example of how working with the right Fintech partner can benefit financial institutions like Commonwealth. We have heard from numerous members who thank us for approving their loans. Many are now turning to us when other lenders are turning them down. Zest AI has made it easier for us to now serve them. Unfortunately, there is still uncertainty in the regulatory environment with Fintech and AI usage. Regulators frequently recognize the advantages of technological collaborations, yet they have also voiced apprehension that certain technologies, like AI, may be functioning in ways that neither they nor consumers fully understand. We are concerned that regulators taking a stringent stance on AI usage in the financial sector could disproportionately harm credit unions and smaller institutions while benefiting the largest incumbents. For example, statements from the CFPB suggesting that AI algorithms function as opaque black boxes introduce uncertainty about the level of regulatory scrutiny, especially in the absence of evidence of harm to consumers. When regulatory entities approach technology in this manner, it reinforces the concern that smaller entities could face obstacles to success, as only the largest institutions may possess the resources necessary to meet such rigorous standards. We believe regulatory assessments of new technologies must embrace balanced and flexible approaches to risk management that can accommodate innovation while protecting consumers. While there may be need for clear rules of the road, those rules should not be so stringent as to stifle innovation or disadvantage smaller institutions. In conclusion, the impact of credit unions, including Commonwealth Credit Union, lies in our genuine commitment to serving communities. Every step we take is in line with our primary mission to better the lives of those we serve. Our partnership with Fintechs like Zest AI allow us to better serve our members. It is important that regulators not create expansive requirements or new hurdles that threaten the ability of credit unions to take advantage of successful partnerships like we have with Zest AI. Thank you for the opportunity to be here today, and I welcome any questions.
Thank you, Karen. And last but not least, we recognize Amy Roberti, Head of Global Policy with Stripe. You're recognized for 5 minutes.
Thank you, Mr. Chairman, and distinguished members of the subcommittee. Thanks for welcoming Stripe to Kentucky. Thank you as well to our wonderful host, the Lexington Brewing and Distilling Company, whose business Stripe has the privilege of serving. Stripe is a technology company that builds economic infrastructure for the internet. Businesses of every size, from the smallest of startups to big public companies, use our technology and tools to accept payments online and grow their businesses. Stripe was founded in the U.S. in 2011 by John and Patrick Collison, two brothers from Limerick, Ireland. Before Stripe, they built another startup and realized that the biggest challenge was accepting payments. That's when the idea of Stripe was born. Patrick and John created just 7 lines of code that they could give to businesses to start accepting payments online in a matter of minutes. Since then, Stripe has grown along with some of the world's biggest and most innovative online companies. But we also power the digital transformation of companies that aren't traditionally online, like Ford Motor Company and Target. They use our software for a range of corporate functions, from analyzing revenue, finding sales opportunities, and preventing fraud. But these tools aren't just available to industry giants. We serve millions of small businesses across the U.S. Nearly 500,000 of the businesses we serve are actually rural businesses. And I'm proud to say that more than 34,000 of them are here based in Kentucky. Today, we're seeing a fundamental shift in how businesses access financial services, with software platforms integrating payments, capital, and other services directly into their business operations. A great local example of this is Pay HOA, a Lexington-based startup. They build a software platform that helps homeowners associations manage their communities more efficiently, from providing payment services to communications. They serve over 28,000 associations and nearly 650,000 homeowners across the United States, showcasing how local businesses can leverage technology to solve industry-specific challenges. But to make all of this work, Stripe partners with a number of financial institutions. These partnerships enable us to jointly extend the reach of financial services to underserved businesses. Last year, Stripe helped businesses around the globe process more than $1 trillion in payments volume. That represents 1% of global GDP. The economic growth is powered by acquiring bank and network partnerships, but these aren't new. They have been around for decades. The difference now is that they're scaling and more finely tuned to meet the needs of each individual business. And this growth doesn't just happen in big tech hubs. As the online economy grows, we see that it's compounding locally too. Since 2010, states including Kentucky, Tennessee, Indiana, Texas, and Nebraska, just to name a few, have seen per capita payment volume grow more than 4 times during this period. Payment volume increased approximately 7 times in Knoxville, 5 times in Omaha, 4 times in Louisville, Houston, and Indianapolis, and 3 times in Nashville and Dallas. And growth isn't limited to urban areas. Over that same period, rural areas across the U.S. increased processing volume on Stripe fivefold, and rural businesses here in Kentucky saw an impressive 8 times increase in volume. How do we keep growing the GDP of the internet? We have a few policy recommendations that we added to our testimony, but in short, we think keep promoting bank fintech partnerships, provide a federal framework for payments companies, digitalize government services that hurt small businesses, and keep fostering innovation. In conclusion, Stripe's humble mission is to grow the GDP of the internet. We're optimistic that technology-driven improvements can help achieve this goal. Through thoughtful policies that scale access and oversight on a positive basis, we can create a more inclusive and efficient financial system for all Americans and drive economic growth. Thank you for the opportunity to participate in this hearing, and thanks for the warm Kentucky welcome, and I look forward to your questions.
Thank you very much. I appreciate everyone for their testimony. I do want to recognize Jim Cash, the President and CEO of the Kentucky Credit Union League, who's here, and also Ballard Cassidy, President and CEO of the Kentucky Bankers Association. Appreciate both of you all being here today. We'll now turn to member questions, and the chair now recognizes himself for 5 minutes. Mr. Traeger, tell us a little bit more about how banks can leverage these third-party relationships to improve access to credit, expand financial services offered to consumers and small businesses, and talk about how important it is for especially community banks to leverage these third-party relationships in a very competitive environment relative to regional and large GSIB banks.
As a community bank, you know, it's our goal to serve more people in more places that the big banks have great difficulty in serving. You know, as I mentioned, we have 47 branches. You know, those branches serve a very real purpose in our community for a very unique clientele. But through those branches, it would be impossible to serve the few million consumers that we serve. You know, our infrastructure in the efficiency is just not capable of a person, or it's very difficult to have a person walk into a bank, walk into a branch, and get a $1,000 loan within 24 hours. You know, we just haven't legacy systems, infrastructure. It is very difficult to do that. Like I said, we serve 100,000 customers through those 120,000 customers through those 47 locations. With the help of Inova and a Fintech, we can serve a few million customers with a need and be able to provide access to that need that customer, for one reason or another, is hesitant to go to a traditional branch bank. So
it's fair to say, because the enormous cost of investing in technology is harder for smaller community financial institutions, these fintech partnerships are critical to level the playing field between the community, smaller institutions and the big banks.
Without question, and we aren't a small bank. It applies to us because we know the cost involved, but to our brethren, smaller banks, you know, there's, I don't know, 2,400 banks in the country. 1,800 of them are under $1 billion in assets. We're $6.5 billion. For those folks in particular that may not have the capital and resources, it would be vital for them to be able to partner with folks, with fintechs, the right fintechs, to be able to offer more products and services to more people in more places.
Thank you. Ms. Harbin, could you give us an example, a really good example of the financial inclusion benefits of partnering with the Zest AI and serving a customer who otherwise would not have access to credit?
Thank you. So with Zest AI, we have been able to make more accurate, unbiased decisions and go deeper with our members and provide financial services to them where they otherwise cannot get services. Zest AI looks at about 190 to 200 data points and provides us a decision in 2.4 seconds. It takes us, if a manual underwriting, it would take us 5 to 7 minutes, and we're looking at 15 to 20 data points. Zest AI has got many stories to tell you, but one in particular, A couple came in to one of our branches, and he had a temporary hardship where he had reduced hours, and he had didn't know how he was going to pay his bills. And we were able to approve him on the spot and provide $6,000 that he could use until he got back on his feet. That would not have been possible without an immediate decision from Zest AI. All consumers are looking for immediate access. You know, you go to the drive-thru somewhere, you want to be serviced immediately. Us being able to have a decision in 2.4 seconds is fantastic, and our members are elated with that service.
Mr. DeVere, can you speak to some of the recent pronouncements or expressions of concern from the Consumer Financial Protection Bureau that could threaten the innovation of artificial intelligence in promoting financial inclusion?
Yeah, I think, you know, from our perspective, we lean in with the regulators. So if we're talking about the CFPB, we are a supervised entity, and the regulations that are on the books are sufficient to protect members from our perspective. But we also work with the NCUA and have a tremendous partnership with them. And so, you know, from our perspective, I think regulations are necessary to protect consumers. But I think, Congressman Barr, you brought up a very good point at the beginning. It's really about competition. And if we overregulate, we will end up stifling competition.
Right.
And our financial institution will be for the worse.
My time has expired, and we might have time for some more questions, but we'll get to Ms. Roberti and Mr. Chartier in a minute. And with that, we now recognize Mr. Mr. Rose for 5 minutes.
Thank you, Chairman Barr, for holding the hearing and for the opportunity to be a part of this. And I had the honor, as you know, just a couple months ago to host you and Mr. Flood in my district, Tennessee's 6th District, for a similar type of hearing. And I share your view that it's important for us to take these hearings back out to our districts, and not only to get testimony from folks who we might not see in Washington, but also so that folks here in your district and in mine can see what our work looks like. And while it may seem at times that these things are a little cumbersome and staged or whatever, the insights that we gain from the witnesses are invaluable for doing our work, and very often are both the inspiration and the encouragement for the work that we do to change the law and make it possible for the American people to engage in the freedom of transactions that they wish to. So I'll dive straight into my questions. Ms. Roberti, in my district, the 6th District, again, of Tennessee, there are over 400 active Stripe merchants. Hopefully that's an accurate number. And Stripe has facilitated over $5 million in payments just in this past June. So those figures indicate that the work that Stripe is doing is appreciated by both merchants and consumers alike. One specific service that Stripe offers is Stripe Connect. I know that companies like Ford have adopted this technology with great success. Could you explain how Stripe Connect would work with dealerships like Ford of Cookeville, my hometown, to connect consumers, merchants, and dealers?
Thank you, Congressman. Yes, we're proud to partner with Ford Motor Company, and I think it's a great example of a product that we offer, Stripe Connect, where we actually onboard the dealerships, and so they have access to the full suite of payments products, anti-fraud, everything they need to run their business. And then those accounts are connected accounts to Ford Motor Company generally. So both parties get the benefit of the business insights that we can see from the transactions that are happening in their dealership. So it's sort of taking maybe a small dealership and giving them the tools that a Fortune 50 company would have. And we've seen that that leads to increase in sales, increase in customer understanding, happier users, more revenue. And so I think it's a great example of a product that just enables innovations for smaller dealerships that maybe wouldn't have access to that.
Thank you. And at the back end of Stripe Connect, what role do bank partnerships play in launching an innovative product like Stripe Connect?
I think this is where, when we talk about bank fintech partnerships, sometimes it sounds very exotic, and we're talking about things that aren't just the day-to-day. So for us, a lot of our bank fintech partnerships are the more mundane, just BIN sponsors. So a bank is partnering with us to facilitate those payments that are happening every day. And so that's how we would partner with a bank for Stripe Connect and to help Ford Motor Company.
Thank you. Unfortunately, in today's regulatory climate, we have regulators who seem to be afraid many times of novel or innovative technology being implemented in the financial sector. Ms. Harbin, as regulators consider acting in the fintech space, what would you say is important for them to consider from a community financial institution perspective?
So we support a balanced regulatory approach. But the regulations cannot be so rigid that it forces smaller institutions such as Commonwealth and other community banks out of business with over-regulation. So I guess that's...
I share that concern, and so the quandary, I think, is to balance the need for innovation against the safety and security of our financial industry and the consumers that rely on it. In the last moments here of this round, Ms. Roberti, I know that Stripe is proud to offer 100 different forms of payment across their online and in-person payment processors. One aspect of payment processing development that concerns me is the erosion of the acceptance of cash as a payment method. How does Stripe facilitate the acceptance of cash during in-person transactions?
Thank you, Congressman. And I think this is important because we're in the business of giving our users what they want, and it's clear that users, merchants, want to offer cash as a payment method in many cases. And so we have a product that's a point-of-sale device called Terminal that you've probably seen when you're paying for something in a store. And we absolutely can operate that with a cash drawer as a cash option, and we think that's really important to offer consumers that choice.
Thank you. I see my time has expired, and thanks for your indulgence, Chairman, and I yield back.
Thank you. The gentleman from Wisconsin, Mr. Fitzgerald, is now recognized.
Well, thank you, Chairman, very much, and thanks for hosting us. What a wonderful opportunity to have a larger discussion on many of the topics that we have been focused on in D.C. for some time. And as most members of Congress, of course, we like to talk about our own districts. So let me talk about the 5th District in Wisconsin quickly, where we do have a bank, the Horicon Bank, that has had employees that have been finalists for the American Bankers Innovators of the Year in 2024. And the reason I bring that up is because what Horicon Bank has been doing is utilizing technology to benefit customer experience with features like opening an account online, as we're all familiar with, interactive teller machines, video and chat services, as well as helping back office functions, fraud prevention, and compliance. Horicon is focused on software as a service solution rather than banking as a service one. So my questions are kind of related to that. Mr. Traeger and Ms. Harbin, have you seen examiners differentiate between institutions that use software as a service and banking as a service? And then what's the biggest obstacle, do you think, in implementing banking as a service solution? So there's kind of the front end for technology and the back end, and I'm wondering if you had any comments on that. Mr. Traeger, you can go first, I guess. Yeah.
Thank you for the question. It's a good question. I'm not sure the exact label of it. You know, the fact of the matter is the regulatory environment is very necessary. I have a high degree of respect and regard for our regulators. Anytime you do anything new or innovative, it is subject to a lot of scrutiny. That waves a flag of risk. Now, we have so much at stake that we understand that risk, and we are very forthcoming with our regulators. Anything new we do, you know, we throw a lot of resources at it. I mean, we've got 35 folks in our compliance department. So we you know, tend to be able to navigate that. with some challenge. I think for others, it certainly is even more challenging, and for us, it's always of concern whenever we try to do anything new and innovative. So I would just say that, we ask for some appropriate regulation. You can't regulate around everything, and sometimes it's just up to the execution of the regulators. They have the tools in place, without question, to address the challenges of innovation. I think there's not a congressional response to every incident that happens. So we make it work. I think it's very difficult for a lot of banks to make it work. It's certainly difficult for us to make it work.
Ms. Harbin, you have a comment?
Thank you. So we've been with ZestAI since 2021 and had numerous exams and audits, reviews, and we are met with applaud. They applaud our efforts to go deeper in serve more members. We are serving more people in protected classes. And ZestAI provides us with numerous reports that we share with our board on a quarterly basis. We do an ROI on the service, the cost-benefit analysis. We went through great due diligence with ZestAI when we chose them to be our partner. Have quarterly business reviews with ZestAI where we go over what we're seeing in our loan portfolio, both the loans that are decisioned by Zest and the loans that we've done manually. And we look for ways to increase our usage with Zest. So it might be that they say if you increased or adjusted your DTI or your number of trade lines, you could increase your approvals by 10 basis points, but your risk stays stable and your yield goes up. So those are the type of conversations that we have with Zest, a great partner. And because of that, we have not received anything from our examiners that raise an issue with safety and soundness of our credit union.
Very good. My time has expired. I'll yield back.
The gentleman yields back. The gentleman from Texas, Mr. Sessions, is now recognized.
Mr. Chairman, thank you very much. What a great opportunity for us to come and take what we regularly do in Washington, D.C., to come back to these districts. I want to say to people who are back here, not just here today, but also listening, that I believe that there's a lot of conversation that happens exactly in Washington, D.C. that's happening here, and that is how we connect more consumers with financial institutions to the benefit of consumers to where they can make decisions about themselves, their future, and for their families. I'd like to, if I can, after thanking you for bringing us here, to recognize that the conversations that you and John and Scott have had were really the word safety and soundness that we understand is important, but the word security has sneaked into our lexicon. And I'd like to ask each of you, perhaps Stripe and Zest would offer their analysis first, but as we've gotten into a world where we're interconnected more and more, so have people through malware and other criminal activities sneak themselves into what I would say the system, not just into an individual company. And in Texas, which is where I'm from, we have financial institutions that report time after time after time their customers being at risk because of malware and criminal activity. If I could just have you perhaps go down the line and talk with us about the activities that you believe, either whether you're receiving good information back from regulatory organizations, law enforcement, or others that will help you to stay leading edge. Thank you.
Sure. Thanks for asking that. I think the safety and security of the data and of the customers is really important to us. And we have a team that works on that specifically. It's a pretty large team and uses a lot of analytics to understand what attacks are coming at us, how we help prevent those, implement additional security to do that. I think that from the regulatory or the oversight standpoint, or even the assistance standpoint from law enforcement, we find they're very helpful, but somewhat overwhelmed right now with all the things that are going on. So when you reach out and you say, hey, this is a problem our customers are having, they say thank you, and they put it in the database and get it shared rapidly, but they can't always do a lot to help the individual that might have been impacted.
So do you share that information, or do they share back with you? Do you think it goes across the organizations that might be banks,
Absolutely.
bankers?
We subscribe and others subscribe to the service that when you put that into the service, it gets shared across. We also have panels and other discussions that occur.
Thank you. Mr. We want to hear from Stripe or Zest.
Thank you for the question. So obviously security is critical in the line of business that we're in. You're dealing with obviously banking information, individuals' personal information. We take that very seriously as an organization and have all the necessary protocols in place. I think the thing that I would offer or watch out for is that there are some other players that are coming into the U.S. from overseas, and they're trying to service community banks and credit unions here in the U.S. Personal information is being sent overseas, which is a really great risk for our consumers. And so what I would encourage, from a Zest perspective is, we use a cloud-based security system and, have never had an issue. But I would watch out, and I would offer to the Congress people here that we do have players coming in from the outside that I think are putting an American consumer at risk.
I think we wouldn't have a specific experience to add, but just we feel an obligation to be guardians of the financial ecosystem as well. And as technology improves for all of us, the bad guys are using technology as well. And that's why I think we're heartened by regulators also embracing technology and taking strides there, because I think they see it as a tool that we all need to combat cybercrime and other fraudsters that are happening online.
Do you believe that would you spot this perhaps for a customer, or do they spot it and do they notify you, or are they pretty silent about what they had?
No, I think it goes both ways, and when we spot it, we have an obligation to raise it with law enforcement, and we do that often.
Thank you very much. Thank you, Mr. Chairman. I yield back my time.
Gentleman yields back. And last but not least, the gentleman from Nebraska, Mr. Flood, is recognized.
Thank you, Mr. Chairman. Good morning. It's good to be here in Lexington, Kentucky, the horse capital of the world. When I look around Lexington and your district, Mr. Barr, I see a district that looks a lot like mine. I represent Lincoln, Nebraska, which is home to the University of Nebraska. Similarly, you have a flagship university right here, and there are plenty of rural areas that are also in this district full of hardworking, quality, sound, and fit community banks in all sizes throughout the state of Kentucky, which brings us to the topic of this hearing, third-party partnerships with banks and fintechs. I'm really interested in the third-party fintech partnerships because community banks, in order to be successful, have to compete with the GSIBs, with the banks like Wells Fargo and Bank of America. And it's important, when you look at the PPP program, community banks, banks that have relationships with their customers, hit that program out of the park because they knew what their customers needed, they knew what they could take on, and they watched for fraud, and they protected the American taxpayers. Fintech partnerships can take lots of different forms. Something as simple as a mobile banking app or an updated customer interface are the types of features that consumers, and particularly younger consumers that will probably never go through a bank drive-through. They will probably not walk into a bank and fill out a deposit slip and hand it to the teller. They're going to do everything on their phone. And for me, it's very important that, especially in rural areas, we have these third-party relationships. So I'm going to start with Mr. Traeger. In your testimony, you made an interesting analogy comparing partnerships between banks and fintechs to the partnership between a restaurant and a delivery service like Uber Eats. Would you mind expounding on that analogy for our benefit?
So thank you for the question. It takes a village I mean, when you're offering products to a lot of consumers that don't necessarily have standard access, you know, we need to partner with folks that help identify the consumers that are in need for us so that we can provide the funding that we plentifully have, or we have in a plentiful way. So yes, the example is a good example. You know, we're the Uber Eats. We generate more business for our partners, and then we help deliver that product. So it's, you know, they enable us to market and to get out and make our services be known to a very broad audience, that we help deliver the product. That's what we bring to the table.
Thank you for that. Ms. Harbin, can you provide some examples of products Republic Bank offers in partnership with Fintechs that expand access to banking services to people that might otherwise be unbanked or the underbanked?
So at Commonwealth Credit Union, we provide personal loans, auto loans, mortgage loans. We are able to go deeper with Zest AI. We actually have 3 of their models right now: auto loan, personal loan, and credit card. And we have data that shows that we are going deeper into those protected classes. We have been with Zest AI since 2021, and that portfolio of loans has quite a bit lower delinquency and charge-off than our entire portfolio. So we're very proud of that. We know that we have to compete on a larger level, and that the way that we can do that is with Zest AI. We don't have the funds for technology like the large mega banks. I think $17 billion is something I read that one of the huge mega banks spent on technology. In contrast, last year we spent about $9 million. So we have to partner with Fintechs to compete on the same stage for our members and to give them the products and services that they are looking for in the time frame that they want it.
And I need to correct the record. You are with the credit union. You are the president and CEO of the Commonwealth Credit Union. I was also going to direct that at Mr. Traeger, but I already hit him with one question, so I let him off the hook on that. One very quick story. I had a 23-year-old guy that had helped. He works in my congressional office. My car was out of gas, and he, on his own accord, went and filled it up. And I said, well, what did you pay? And he said, $59. So I wrote him a check. I handed him the check, and he looked at it, and he was like, what am I supposed to do with this? That is a reminder where we are and where we're going. Thank you. I yield back.
The gentleman yields back. Thanks so much for these questions. And with the indulgence of the witnesses, we're going to engage in a quick second round, lightning round, if you will, where each of the members will have an opportunity to ask one final question. And so we'll start here. But before I go to my final question, I do want to recognize State Senator Donald Douglas, who has joined us. And we appreciate state legislatures taking a look at the innovation that's happening in financial services, because obviously you have a role to play as well. And in that vein, let me ask my question to Mr. Chartier. You testified earlier today, and we've talked about this before. You've urged Congress to reverse the mistake that Congress made with invalidating the true lender rule from the OCC. You've urged Congress to reinstitute the OCC true lender rule and making federal law applicable to all banking institutions and clarify these opt-out authorities. Why is preemption, federal preemption, so important in this space that is interstate commerce, and how would that enable more innovation and financial inclusion? And if you could, describe the problem to those who are watching.
Sure. So thanks for that question. And, you know, I'll leave preemption to the lawyers and the bankers a little bit, but I would say from a service provider, from a product developer, you want to get the largest market you can reach as thoroughly as you can. And I talked about how, you know, there's populations that and certainly Steve talked about how banks have a problem serving certain populations because they can't evaluate them, because they can't develop the technology that's necessary. When you go to put that investment into building a product, you want to reach as many markets as you can to increase the efficiency of the delivery of that, so we can lower the prices, so we can be more competitive. When you go to do that in the U.S., you run up against state laws because each state has instituted laws over 200 years that influence credit products that consumers or small businesses can get. So when you go state by state, often they'll have defined products. I always talk about they define for a consumer or a small business looking at credit, it's like a 10-story stairwell, and they want to get to the top. But a state will come in and they'll say, well, you can have floors 1 through 3, but you can't have floors 5 and 6, and then maybe we'll give you 8 as well. So people get trapped where they are because there's not products that fit the place they are in their credit or financial health journey. So the state environment makes that very difficult. The banks can come in with a consistent product across all the states because of their preemption, and they can deliver to all those people, and that allows people to move freely through a pathway of financial products back into regularized and more standard and traditional banking services. That's the importance. And the OCC recognized the confusion that was out there and said, when the bank originates a loan, it's the bank's loan. If they then choose to manage their balance sheet by selling off some interest of that to make sure they're fitting the regulatory environment, that doesn't change anything. That's critical to us because that allows that uniform presentation of the product across all the markets.
Thank you. Mr. Rose.
Thank you, Mr. Barr, and I want to thank you again for hosting this hearing. Mr. Roberti, I want to pick up where I was when I ran out of time before. I just want to say I would urge Stripe and all payment processing companies to continue to accept cash. 67% of Americans still use cash for making in-store payments. My late colleague, Representative Payne, and I introduced the Payment Choice Act for this exact reason. Cash is king, and Americans should not have their business refused for paying with legal tender. And so my question for you, are there any plans to remove cash as a payment option at Stripe in-person terminals?
No plans, Mr. Congressman.
Super. That's great to hear. And the civil libertarian in me says I want to see cash continue to be an acceptable form of payment, and maybe even the next generation will come to appreciate it at some point. Thank you. I yield back.
Mr. Fitzgerald.
Congress to establish an optional and tailored federal charter for payment companies. They're also seeking direct access to the national payment system. This would obviously bypass some of the bank partnerships and allow these companies to avoid the full spectrum of bank regulation. Mr. Roberti, you're familiar with it, and I'm sure maybe you've had some time to kind of consider what the challenges would be. But if some of these bank regulations are unnecessary under such a charter, how would you still be able to scrutinize the safety and soundness of the fintech companies?
Thanks for the question. Look, I think in other parts of the world, so we're regulated, we have 80 licenses across the globe, and in other parts of the globe, we have different bespoke kinds of payments regulation. In the U.S., it's different. It's more binary, so you can either be a state-regulated, state-chartered payment entity, or with all the limitations that come with that, or you can be a full-fledged bank, and there's not much in between. So I think what we would just encourage in partnership with state regulators and recognizing like the great work of CSBS and the modernization that's happened there. But we should just think about ways to innovate. It works in the rest of the world, and with it comes supervision that's tailored for the level of risk that it presents. There's something between, like I said, the risk of a full-fledged bank offering loans and then payments. And so I don't think we have all the answers, but I think we would encourage the committee, as you have, and others to just take a look at what options are out there.
Mr. DeVere, do you have a quick comment on that one? Very good. Thank you.
Gentleman yields. Gentleman from Texas, Mr. Sessions.
Mr. Chairman, thank you very much. From time to time, almost every time when we come into a hearing, we learn things that we did not know. And that's because we have a staff that works regularly on some of the issues. I'd like to go to Karen Harbin if I can. The question is that I learned from our notebooks here of our homework. The National Credit Union Administration, NCUA, does not have authority over third-party vendors who partner with credit unions. So the question is, in your opinion, is this helpful or harmful, and should this be recognized and give them the authority, or do you believe you have the knowledge and the resiliency to handle this yourself?
Thank you for that question. We believe that we do not need NCUA to have third-party vendor authority. We look at our third parties and do due diligence, which is adequate. If NCUA had that authority, it would increase costs to credit unions because they would have to staff with experts that looked at all these vendor relationships, and it would ultimately cost credit unions a lot more money. So we do not support it.
So this allows you to be more nimble.
Yes, more flexible.
This allows you to make decisions that you would choose to make.
Exactly.
And you do not believe that it would be necessary, so do not need to approach this issue.
Do not.
I found that very interesting as a question because we tend to want to have the viewpoints that we want to give everybody an opportunity to go to third-party vendors, but hold them accountable also. And so I found this as the most interesting question that I think has been unanswered here. I would come back to this question that I still have, not just about safety and soundness, but security. Did anybody else have feedback that they would like for us to know? Because I've heard the testimony that's been given that you believe that law enforcement does listen. You believe that law enforcement is perhaps doing the best that they can. But do you offer other feedback? Because I still believe the feedback that I've heard, albeit from a lot of Texas entities, is that there's still a huge concern about the numbers that keep adding up about the criminal elements of malware. Does anybody else have anything to add on that issue? Yes, sir.
Thank you. The OCC Control of the Currency, Sue, just recently was quoted about AI and fraud, or fraudsters out there that are leveraging AI today and the need for better tools. I think I would just add to your security comment and talk about the importance that organizations like Commonwealth and other financial institutions not only could leverage better technology like AI for underwriting, but you can also leverage AI to identify fraudulent behavior. That humans can't find patterns, but the AI actually can. It will have a material impact if more and more financial institutions adopt this approach. In our recent release with one of our customers, we were able to eliminate 60% of the fraud just by focusing on the top 15% most risky applications that came through. That's a material impact. The average credit union is losing $500,000 a year to fraud. And so when we talk about security, I think it's also important to add in fraud and the opportunity that these types of tools have.
Well, I'd like to agree with you, and I hear over and over in these conversations, larger or smaller organizations still learn a lot about the things that are evolving every day.
Yes, sir.
And at some point, it's hard to get necessarily what I would call a customer or end user to stay up with all those things. Perhaps it's people who you've only given a loan of several $1 million to, but they also find themselves in an attack. And so I'm kind of looking for your feedback to tell me where you think that presentation should also include, to where you give information back perhaps to your customers, to where they can give information that flows all the way to the individual that says, here are the things that we believe you should include as leading edge security back into your own company. So, Mr. Chairman, thank you very much. This hearing as I looked at what we were attempting to codify here into understanding about fintech relationships is being proved, and I think it was worth my time to be here today. I yield back.
Thank you, and we do appreciate you and the other members making time to come to Kentucky. Finally, Mr. Flood from Nebraska.
Thank you, Mr. Chairman. Again, thank you for the invitation to Lexington, and this is for anyone that wants to maybe react to it in a very brief way. I'm interested, what are regulators and examiners talking to you about when it comes to bank fintechs partnerships, and are there things maybe they're misunderstanding, or are there things that you maybe think they're not looking closely enough at? What are those conversations with the examiners and the regulators like in your bank or credit union, and where do you think we're going with all this?
Thank you. I'll answer that first. So, as I said before, we do a great deal of due diligence before we ever partner with a fintech. The examiners look for that. They also look that we are monitoring the portfolio and we understand what's going on with the portfolio and make changes and adjustments as needed if we see something getting out of hand, such as delinquency or charge-offs. But our delinquency and charge-off using Zest AI is much better than it is in the overall portfolio.
Well, there's not much I can add to that. That's absolutely right. They are looking for thorough due diligence, oversight, and monitoring when it comes to partnering with third parties.
Quick question about Kentucky, just so I can understand your banking landscape here. The mix between federally chartered banks and state chartered banks. In Nebraska, we've got 139 state chartered banks. Now that's down from 180, but we've seen a lot more folks move their charter from the OCC to the state side. What's happening in Kentucky? Are people moving to the state, or are they moving to the Fed?
Well, I think, I don't know, 5, 6 years ago, it seemed like there was some movement toward the Fed, toward that, but I think that's kind of stabilized. And at this time, I don't sense that there's a lot of movement. We are state chartered, FDIC, FDIC and the state are our primary regulators. And, you know, there's some benefit to familiarity. They're familiar with us, we're familiar with them. And given some of the innovative products that we have, it's very helpful from an education standpoint when they come in that we don't have to start from scratch and refamiliarizing them with the things that we do.
And as a state chartered institution, how is the Kentucky legislature looking at digital assets, digital asset custody? Is there a state regulatory framework that's in place or being talked about? Is it something you're interested in?
I'm not knowledgeable in that regard.
It is Pig Latin to most people over 35. I agree.
Right.
And I guess I ask because, you know, one of the questions we're going to have in Washington is, we have this question. There are a lot of folks on the other side of the aisle, especially, that want a federal top-down thumb on everything when it comes to digital asset custody. And for me, a state pathway is very, very, very important. And as a state-chartered institution, working with your state senators and your state representatives, I really hope that the banks in the state of Kentucky can continue to be state-regulated and not have to deal with some foreign power. The state of Kentucky should determine its own future in digital assets, and when you are customers and you feel like it's the right time to take custody of their digital assets, I hope that you can do that without burdensome interference from the federal government. So with that, thank you, Mr. Chairman. I yield back.
Spoken like a true former state legislator. For those of you who don't know, Congressman Flood was the Speaker of the unicameral legislature in Nebraska, and thank you for sticking up for the Commonwealth of Kentucky from Nebraska.
I am a Kentucky colonel.
With that, so again, thank you to all of my colleagues for making the trip today. Thank you to our witnesses. And these field hearings they're hard to plan because we're bringing Congress to the American people, and it's expensive and it takes time and a lot of effort. And I want to thank my staff for organizing this. It takes a lot of hard work. So Mary Rosado, my chief of staff, I want to thank Tatum Dale, my district director, and our entire district staff, Tyler Staker, my communications director, Kaylee, also for helping out, all of you all. Let me also thank the staff of the Financial Services Committee, Megan Gilton and my Financial Services Committee staffer, Jeff Rays, who's the staff director of the FI Subcommittee, Kathleen Palmer, David McGrath, Trish Halloran, Grace Tricomi, Bo Brooks, Glenn Sears representing the minority staff, Rob Wagoner, and Jelia Nagawati with Representative Rose. Thanks to all of you all for putting this together, and to our guests, thanks for being here. To our witnesses, we are so grateful for your insightful testimony. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for the response. I ask our witnesses to please respond as promptly as you are able. This hearing is now adjourned.